what is happening here, the algo in Nasdaq is just sweeping low after low after low. But look closer, look really close, guys. It's not only after filling this volume imbalance, what does it do on top of the rejection over here? Me as a trader, I'm very confident in the tools I'm using, so I don't want to confuse myself too much. Literally, I'm not even looking at Nasdaq, I'm not looking at YM when I'm trading the ES, I'm literally only looking at the ES because I don't care what the other do. I have seen so many days where I could have made a crazy good long trade in ES, and on the other side, I could have taken a short trade in Nasdaq. Every index contains different stocks. The S&P 500 has different stocks than Dow Jones 30 and different stocks than the Nasdaq. On the bigger time frames, they most likely move in the same direction. But the internal structure, especially if you look at the 5-minute and you're trading DR, IDR, which is like defined ranges, time ranges, it doesn't matter. They can do opposite and still go into the same direction. I mean, if we look today at Nasdaq, for example, so Nasdaq made a new low, broke out to both sides of the ODR, and then just did what the other twos are doing. Well, Dow Jones is very clear. So literally today, only Nasdaq was doing strange stuff, and the other two. That's also the reason, guys. If you're new to trading, if you're not like a seasoned trader for many years, you should trade the ES. Stay away from Nasdaq, stay away from YM. One of those two will always make some crazy stuff. Either the Nasdaq or the YM, they are doing some crazy stuff when it comes to expansions or to sweeping stuff. In 99% of the cases, the ES is the one in the middle. And for me, it still has the best and cleanest price action, even though statistic-wise NQ is a little bit better for DR. If you're not really experienced, stick with the ES if you want to trade equity. Even if you look at the Nasdaq, it's a very simple stuff over here. So we have a gap over here. Look at this. This is happening from last night to tonight to the opening. So we fill this gap and then price continues up. We are sweeping again, going below this level. So you don't have this price movement in the other two. So this is like what is happening here. The algo in Nasdaq is just sweeping low after low after low. But at the end of the day, this is like a box. So we are moving nowhere. The nicest today is ES. That's why I like it. That was Friday price action. So we literally stay inside of here. And then we are opening Monday. We are extending to the downside quite easily. So Monday's price action, I can't even say a lot of, I mean, this week was just crystal clear. That was Monday. So we are going down. We are rejecting very clearly from the high IDR levels. We are going down. You're getting your confirmation. We are going up. You're waiting. We are going down and we are rejecting 1, 2, 3 times from the DR levels. Latest with the third time, you should be short. Stop somewhere 2 ticks above the IDR levels and you write this baby down. It's almost impossible if you have understood what I'm teaching about DR, it's almost impossible to lose money. So if you lose money, you really have to go back and study. This was a day for free. This was a freebie. That was like everything is on the house. It can't get clearer. So here's your confirmation candle. It goes up, you don't see a rejection over here, it goes down. So even then, getting confluence. So what we have here, we have a volume imbalance. So if price goes down and you have that and you have a confirmation to the downside, what do you expect here? We are rejecting from the 0.5 levels over here. We are going up. We are filling the volume imbalance and we are rejecting 1 time clearly, 2 times clearly. So let's say you don't want to take this trade. Going down. We are coming up again. What does price do again? Rejecting exactly to the tick with the wick from the DR level. But look closer, look really close, guys. It's not only after filling this volume imbalance. What does it do on top of the rejection over here? Price never, after getting filled, closes above the volume imbalance. You have one rejection, goes down, comes up again, rejects to the tick from the DR line, and is not able to close above the volume imbalance. Price goes down again. We're coming up again. We see rejection first from the volume imbalance and rejection again from the DR level. So that's your point where you don't have to think anymore. I mean, stop waiting. You will never get 100% when you're trading. There is a point where you have to say, okay, price have showed me enough. Now it's time for action. It's like you're going out with your favorite woman. You're sitting there and you're having a nice dinner. There are candles. She's smiling at you. She's looking into your eyes. And there is a point where you have to make the move, my friend. There is a point where I have to say, okay, now I'm taking all my guts together and I'm going to give her a kiss. I'm going to touch her hand, whatever. At one point, after you receiving enough signals, you have to take your luck into your hands. If you're not able to do that, don't even ask me. If you can't take action when you see price developing, I can't help you with that. That's something which goes way, way deeper. This is something to do that you don't have enough confidence in your own trading style. At one point, you just have to shoot. And like with the woman or with the girl, maybe you interpreted her signals completely wrong and she's slapping you after you try to kiss her. But that's life. Yeah, you will never find out if you never try. And the same with the trade. Latest here, you have to press the button. I mean, if the woman rejects you, fine. Happens, then you know that, okay, I was maybe wrong and I interpreted the situation wrong. But like, you have to try because else you will never know. She will go home and she will think, oh my God, what else should I do? This guy is an idiot because how much more? I smiled at him, I showed him that I like him and he didn't try anything. So maybe she's even thinking you don't like her. So same with price. So this third rejection from up here is just simply where you at one point just pull the trigger, you take the IDR as a stop level 2 ticks above, and that wherever you want to put your price target, we reached already 1.5, so I would suggest to take the next standard deviation level. So that's 4R, and these 4R, they are for free. So that's Monday. So we are closing exactly at the standard deviation of the 2.5, the minus 2.5. So that will be important. Mark this level because that's the reason why there is something. 2.5 equal with what? The low of the day. Keep that in mind. This is clear, like this is slightly short favored. So market doesn't give you a confirmation, and I give you a trick. Whenever you see, I know there is an early indication in here, yeah? We're all aware about that. But look what is happening. This is the first, or this is the early indication from close above the IDR. Look at the rejection from price. It's not only rejecting and closing below, it's immediately taking it back. And there are a lot of videos where I'm talking exactly about that. Price taken and immediate rejection with a candle which is bigger than the candle which is closing above. That's always something where you should say, okay, I'm careful now. That is not a sign I want to long right now. And again, price tries to go above. And what we see again, we see the same. Bigger down candle than the up candle which is closing up here and going down. We don't even see a clear rejection over here. It stays here, it stays here, it stays here. So no trade over here because we don't have a confirmation. We close the gap. As you can see, we are coming down and we're going up. And here in this candle, again, you see a clear rejection. So if you would have not taken a trade up here, that would be a potential entry point because look what is lining up with this gap like magic. Look at this line, which is what? It's a minus 1.5 standard deviation from the IDR. And look, if I remove this one, look at it. And look what is price doing exactly at this line. Nice retracement, up exactly to the 1.5 standard deviation level, which is like magic, aligning with the gap levels. Look at this. So that's definitely an entry where you could have shorted over here, or at least try a short over there. Target would be new low, and even a new standard deviation. But that's not the trade you have to take, but that would be an advanced use case. Again, look at the standard deviation level, look how price is rejecting it and using it, and we are closing below and we immediately take this. So anyway, price goes down, we are expanding to the upside. The DR is forming. No trades to be taken here, but again, look at this 3.5 standard deviation and look where our ODR levels are forming. Look at this. It's to the tick, but we are not taking a trade here. So we go up and look where we are rejecting from. Look what is up here. Here is the minus 1.5 standard deviation level from the RDR. Surprise, right? Random. Anyway, we are getting a long confirmation. Price goes up, and look what is up here. Here is the DR low from the ADR session. Price rejects from here. Rejection, 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 rejection. We go down. Here is a volume imbalance. We take it, we stay above it, we go above. Where are we rejecting from? This is our DR high. Rejection, rejection. We go up and we go down. And what we see here? So here we have two things. We have the 2.5 standard deviation and the midline. We have a volume imbalance over here and we have a volume imbalance over here. Price comes down here. You don't take a trade over here. You wait. Market comes here. As by magic, oh, 1 tick difference, bad market. So 1 tick difference rejects back, closes above here. Next candle, market comes down here, rejects where? Exactly at the volume imbalance. Closes above, mid and standard deviation 2.5. Goes up, stays above. Here is your entry. That could be your entry. Long confirmation, that means I am looking for a long. That's how it's looking like. So another trade which you could take. Also, what is this telling you? What is the combination of these two IDR sessions telling you? And this model is very interesting. That's a model. It can happen to the downside and to the upside. And this model is telling you that we are having a high chance that this low could be a swing low in terms of market structure. Exactly this model, small ADR, big price expansion, and within the ODR and the RDR, we are taking this out. So this could be a reversal point in price action. This model is happening to the downside and to the upside. Look in the charts and you will find at very important points of the market, you will see this model forming in the lows or in the highs. So if you enter here, you are already done before the session is closed because we go up and look where we are rejecting from again. IDR low, but you get already a long confirmation here. So we are rejecting from here, we are getting a long confirmation. So we are coming down, and where are we coming? We are having the -2 standard deviation level here. We have this beautiful volume imbalance over here. We have the open price over here from the RDR session. So 1, 2, 3 clusters of levels where you look how price is reacting. And what is price doing? We are coming down to the open price, rejection. We are coming down to the -2 standard deviation level, rejection. We are touching into the volume imbalance. We are touching again into the volume imbalance. And again, to the tick. This one is not going below the 2 standard deviation level. So 1, 2, 3, 4 candles. The next candle is rejecting from where? From the open price of your RDR. The next one candle rejecting. So, and that's where I took my trade. So, and you're not looking for a short. Whoever is looking for a short here doesn't understand DR. Can't get easier. So here, confirmation, close above the DR. Your mind should not be even thinking about shorting something. So your mind should be focused on where do I go long? And this is also like close to a retirement setup. Price goes up, gives you a confirmation for one side, and then returns close to the other side IDR levels. And that's where the retirement setup is happening. You wait for either the other side of the DR levels or a new high that will be your targets. It's a very simple trade to execute. That's all. It's like a free trade, in my opinion. Long trade, wherever you want to enter, here, there. If you're more comfortable with bigger stops, you put it 2 ticks below the IDR levels here, and your target is a new high. That would be 2.44R for free. If you are like me, you enter here and your stop is over here, 2 ticks below the volume imbalance, and you can get like 13R. Depends on you. Setup is all the same. It's all how much confident are you in your entries. If you have seen my charts, I literally entered exactly here. This was my entry, and price was literally respecting my entry. Never came back there. Let's say you missed this entry. Again, volume imbalance, volume imbalance. You missed this entry for whatever reason, you're not confident enough. It's all 5 minutes. Like, just look at the 5 minute. Don't jump time frames. Don't look around. When you learn and when you study, focus on the 5 minutes. It's the best time frame. And just go long over here. Your stop would be 2 ticks below the volume imbalance. Your target would be the same new high, another 6R. Thank you guys. Bye bye.